Hey everyone, welcome back to Crypto Cash. I hope you're having an amazing day. I know I am personally. And this is your one-stop shop for cryptocurrency analysis, among many other things. So if you're new to the channel, we look at the technical analysis here, technical charts. There's no fundamentals here, but I do implore you to go ahead and link down below. Go ahead and let us know what fundamentals are causing this, because I took a quick peek at Sleepy Love Potion, SLP. By the way, that's what we're covering here today, and it is increasing significantly over the last 10 days. So it's had a pretty strong bull run. We're going to look at that so we can help identify good entry point, best practice, and ideally learn something along the way, because I'm not a financial advisor. This is for educational purposes only. Of course, I'm sure you've heard that before. And just note that you should always do your own research. It's extremely important that you do that. But what you're going to learn here today is something more supplemental, more technical, that I feel also is a big indication of being a successful trader, right? I have a very good success rate so far with my signal group. Link in the description below if you'd like to check that out. And ultimately, I think we're going to be able to help you learn something today, right? So that's the whole purpose of this, is to teach you to trade for a lifetime, not just for one day. All right. So let's go ahead and take a look at that. So without further ado, Sleepy Love Potion is on the way. All right, folks, let's go ahead and take a look at SLP, which is Sleepy Love Potion, the most interesting name in cryptocurrency. Well, one of the many. There's a lot of unique ones out there, and this is one of them. That being said, I have a really good group of folks here, so thank you again to my community for asking that I cover this. You're all awesome, and surprisingly, have a unique subculture for SLP. That being said, we're going to take a look at Bitcoin and Ethereum first, just before we take a look at SLP, to get a baseline on the market so we know exactly what's going on. And the whole purpose of this is to ensure that we make an informed decision, right? We want to look at what the industry leaders are utilizing, what the whales are using, and if we can follow along, we increase our odds, increase our success rate of a successful, more beneficial trade, right? Or at least learn a thing along the lines, right? Here, and we're going to learn a thing or two here today, and I want to make sure that you trade for a lifetime instead of just for one day, right? That being said, we're looking at Bitcoin first, and this is TradingView desktop application. Just so you know, TradingView.com. I always recommend the premium or pro version, just because you can add a lot more indicators instead of only 2 at a time. But it is free, of course. But if you do want a discount on that, I have a link in the description below as well. That would help me and you as well. So really no trouble there. That being said, with Bitcoin, we want to look at the 4-hour chart, because that's the best timeline, in my opinion, to get a quick perspective. If you're going to look at any time frame, 4 hours is probably the best, in my personal opinion. Okay. Now, what we look at is a few things. First of all, support and resistance levels, which we have here already, as well as the major moving averages, right? So I use the 200 simple moving average, that's this purple line here, and the also 50-day simple moving average, right? That's the orangish line here. Now, to clarify, what they do is they essentially work as major support and resistance levels based on the price being above or below. You can see this here. If you look at this guy, Bitcoin rejected 5 times on the 200 on July 4th. So there was no independence day there for Bitcoin. It was basically, held down, so to speak, by the man or whomever, and the price just went the opposite direction. But that's how a moving average works, right? So the 200-day moving average is a very strong resistance in this scenario. When it breaks above and stays above, it becomes a support, right? Same thing with the 50. If you look at this 50-day moving average, almost every single time you note, the price blows straight through. Boom, 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 and boom, right? So a lot of booms there. Not good. Those are not good, but just something to note: when the price tries testing a resistance level, it either gets rejected for 20 hours in a row, or it breaks through and shoots straight through. So that's just something to understand, because resistance levels, specifically the 50-day moving average, have a tendency of being broken really hard and really fast. So just note that where price is currently under the 50-day moving average, and we're seeing right now it working as a resistance level, right? Furthermore, we do have 2 major resistance levels. There is the $42,000 mark, which was a previous resistance initially, and it hasn't gotten back up there since, as well as a major support at 30,000, but a massive resistance at 36,500. I think this will be one of the biggest things to break in the near future. Obviously, we got to get above the 50 and the 200 first, but 36,500 is essentially what we need to do in order to have some kind of success. All right, let's go ahead and move on and take a look at Ethereum. Now, Ethereum is interesting. It's kind of like the ugly duckling right now for crypto. In other words, it used to be like the go-to coin for everyone when Bitcoin did poorly. Now Bitcoin does poorly and Ethereum does worse. It's just it's a terrible, terrible situation, unfortunately. And it's just one of these strange scenarios that's occurred, but the last 2 months has been pretty abysmal. Unfortunately, we had this massive sell-off from the 15th to the 22nd, the 1 week of just straight disappointment. When Bitcoin tested 30,000, and then since then it's tried to ramp back up, but it really can't seem to pull it off. So honestly, I'm kind of losing a little bit of faith in Ethereum, but it's again, Bitcoin's a catalyst, so we really can't blame Ethereum for this. But I can tell you, there's not a lot of folks trending over towards Ethereum right now when they used to, and that's what's causing this. We have really low volume, really low volatility lately, and it's been a unique setup. So we're hoping for some more volume, get the price back up right past this right around 2150, 2200 mark. Keep in mind, we do have some major resistances working here. The 50 and the 200 are now kind of essentially connected, right? They're both running parallel, for lack of better terms, for the now, and we should expect to see that working as a resistance, whereas the 50 will kind of keep trending back down, and the price will either break through or keep going down. Again, really depends on what Bitcoin does. If Bitcoin goes sideways for a couple of days, then perhaps we'll see Ethereum take off. It tends to have a lagging response to Bitcoin. It takes just, I don't know why, it seems to be 8 to 16 hours later, it will respond to Bitcoin going sideways, right? So we're hoping for that to happen here. Did fairly well here for a little while, but yeah, it just kind of lost us. So that's where we're at for Ethereum. Moving on to SLP. First thing we do, always look at the 1-day chart first. And with the 1-day chart here, you know what, why don't we do this here? I think I might want to find a different one. Let's see. Does Sushi Swap have it? No, looks like, yeah, we'll stick with the one we got here. But generally speaking, there's not a ton of data based on this being introduced to, I believe, Binance on May 1st. Okay, so just keep that in mind. On the 1-day chart, really doesn't matter too much in my opinion, because the moving averages are not super important. The price is over the 50-day moving average, and if there was a 200, it'd be over that too, because obviously it's shooting to the moon right now. And bottom line is that we don't have a ton of data, but the price and the RSI is very overextended, and we're looking at almost 80, 85, 86 for the RSI. So anything over 70, 75 is cause for concern, or just something you want to pay attention to, specifically on the 1-day chart. But when it's over 80 in the 1-day chart, that means it's been going on a long run. Not to say you have to sell or you want to sell per se, because there could very well be some really strong fundamentals here. But what I'm trying to get at is the fact that it could very well be just a very, very healthy bull run. And I do see some nice consolidation pieces here. So if we look, you can see 1 to 2 days of consolidation almost every couple of days. So that's a very good sign of a good, healthy bull run. So we'd like to see that. There's a good chance that's the reason why it's still alive and still hasn't retraced, because it is making this staircase pattern up, over, up, over. You can see the pattern, right? All right, so let's go ahead and look at the 4-hour chart. And the 4-hour chart here is, well, I see a lot. So let's talk about this here. First of all, first things first, price is over both moving averages. So that's fantastic. And oftentimes when the price is above both 50 and the 200, that works as kind of like a double support. So at this point in time, until the price comes down and tries to test the 50, it's going to be a consistent support. Same with the 200, it's just lagging a lot further behind. We probably won't see that tested for some time. RSI is up over 70, it's right around 78, but here's the cool thing about this. Take a look at how it's running. So it jumps up over 70, and then it retraces and comes back down. Jumps up over 70, retraces, comes back down, but it's not coming back down significantly. Comes here, tests 70, stays below, and then it ramps up right now. And look at that, another healthy little sell-off. So we got a 12-hour sell-off here. 12-hour retracement there as well. So it's going on this comfortable increase, followed by right around 12 to 16 hours of retracement. That is probably one of the best kind of bull runs you could go for. So anytime you see this, we might be a little bit on the late side, and we'll see if we can find out if that's the case or not. But the bottom line here is that hypothetically you would have seen this happen a couple times. This would have been an awesome entry point right around here on the 8th of July. So 4 days ago would have been a good entry. Of course, it's easy said than done. I know, looking back at it, it's like, oh, obviously that was a good entry point, right? We see it clear as day, but all the indications are telling us that when we see the increase, retracement, consolidate, and then rinse and repeat. It's been doing that consistently. I mean, look at the MACD, for crying out loud. And we got a divergence followed by a convergence, divergence, convergence, etc. It just keeps on repeating the same pattern. So whomever is controlling this, which I venture to guess it is not you and I, they are very smart, they are very wise in driving the price up because it is extremely valuable right now, a lot more than, I wouldn't say that it should be. Again, I don't know the fundamentals here. But based on the technicals alone, this is a very, very good, comfortable, healthy bull run, the kind of bull run that you'd like to see that will likely continue. Again, it's a little on the overextended side right now. I'm a little concerned with the RSI being at about 85 on the one-day chart. That does have a tendency of retracing when you see that long of a run, but it's been a healthy run. This reminds me of Binance a few months ago before, after the very first sell-off from Bitcoin, when Bitcoin sold off from like 50 to 40,000. Binance went on a tear, but it only increased about 15 to 20% per day. It was like a sleeper, and it did just the exact same thing as this: up, over, up, over, up, over. It's like a staircase pattern. I just love it. So I get a little excited about that when I see these things on the technical chart, because it's not very often you get to see a kind of such a nice increase here. That being said, let's go ahead and take a look at the 1 hour chart. This will probably be pretty straightforward and self-explanatory, but we're going to look at the Ishimoku cloud. Big surprise, price is above the cloud, and it's been consistently doing so. And in fact, the cloud is almost working as a support. So if you see this here, price comes down, barely breaks below and stays above. Barely breaks below. I mean, this is looking a lot like an EMA line, holding the price action up above it. So, that's some pretty good stuff here. And if you're new to the channel or just in general to the Ishimoku cloud, when the price is over the cloud, obviously the red and green lines there, the price is considered to be bullish, right? It's basically bullish. It's buy signal when the price is above the cloud. So hypothetically, if you're to go back in time, this would have been a good entry point, and this would have been a good entry point. Same with this too, for that matter, right? So again, consistently, anytime the price is above the cloud, it tends to stay above. Again, this is a bull run in a period of consolidation, much different story, right? You see back here, it's difficult to gauge when you got this craziness going on here. Oh, I'm going to buy in, and then it just sells off. And is that a good short position? No, it's going to come back up. You can see how messy it gets when you got a state of consolidation. So that's why if you can identify a good bull run by first of all looking at the MACD on the 1 hour, correction, the 1 day and the 4 hour chart, and then concurrently coming over here to take a look at this on the Ishimoku cloud, you're looking to be in pretty good shape if you can identify that. Right. So let's clear off this mess and let's take one last look at the TD sequential. And this is going to tell us market exhaustion, because TD sequential is nice because it tells you when you've had too much of a run in one direction, right? Now this is a long run, of course, but when it comes to this most recent spike, what is it, about 6 hours ago, we can see a 6 up here, okay? So if you see that 6, what that basically just means is we have 6 bars closing above the previous 4th bar. There's kind of a science to this. There's a lot to explain. I don't want to bother you with that or bore you with the details, because the takeaway here is that we want to look for a 9, right? So when we see a 9 showing up here, there's a strong chance that it's reaching its exhaustion point and that it could retrace back down, all right? So just kind of pay attention to that. If we see, with hypothetically at this point, we've got about 3 more hours worth of increase before we need to worry about it consolidating and retracing back down. Again, this is not an exact science, but we use this in combination with other things. We can tell that it is definitely something that is worth worth noting, because all these previous little runs all go up to about 5 or 6. So honestly, it's difficult to identify, but hypothetically, that is what we're looking at for that price action. Okay. So let's go ahead and take a look at the 15-minute chart. And we're going to look at my favorite indicators here, but this is going to be kind of a stacked deck, if you will, or not really all that great of a indication of where the price is going. We might need to look at the Fibonacci Retracement tool. We could use that on the 1 minute chart, but for right now, I'll just quickly explain. We got the VWAP line. This is this blue line here. It's the volume weighted average price. Takes the volume last 24 hours, expresses it as a price. So right now, based on the volume, the price should be at 33 cents, whereas it's upwards of 35 cents. It's not a strong variance. That would probably only be right around 7%. So all in all, the standard deviation isn't super high, so we don't need to worry about it come crashing back down because it's kind of a healthy increase. Furthermore, the EMA is the same thing as well in a sense, whereas it works itself as a support, or kind of telling you if there's bullish or bearish momentum. So if we see this, see how the price increased up, came back down, bounced off EMA, comes up, bounces off EMA and VWAP, breaks and loses EMA and VWAP, but still holds above. That signals a state of consolidation. And then it comes down here, and then it tests, and then it goes on another run again, right? So just looking at the EMA alone, it's hard to identify this is a good entry point. But if you use that in combination with the VWAP and also 30 minutes of confirmation in the direction that you're heading, in other words, if you're going long, it's going to be a bullish sentiment. If you're going short, it's bearish. What I mean by that here is if we take a look here, this is my indicator. This thing tells me, and I share this with my patrons. This thing tells you when you've had 30 minutes of confirmation. So this little yellow indication tells me that, hey, price is over VWAP, price is over EMA. So I get a notification or an alert when that happens. And then I can take entry at this point here. Okay. So had I done that, because I didn't have that syndication set up, by the way, I would have netted about 25% in somewhere in the range of, about 10, 11 hours. So that's kind of how that works, right? So just big picture, if you're going to look for confirmation, you don't need this fancy indicator. You truly do need to know that confirmation, good confirmation, is a longer time frame, right? In other words, that's why swing traders use the 4-hour charts. They don't use the 1 minute chart because it doesn't make a lot of sense because you're holding it for longer. In this case, if you have a longer time frame, just say 2 15-minute green bars, that gives you a total of 30 minutes of confirmation in the right direction, the appropriate direction, then that'll help you identify a good entry point. Okay, so I always wait for 30 minutes of confirmation, in other words, 2 green candlesticks over EMA and VWAP, and this has a tendency of being fairly consistent. Right, so again, there's indications here, right? Had you gone in here, it wouldn't have worked. Okay, so it's not always perfect, but what you want to look for is higher highs and higher lows. Once it found its bottom here, it came up and it tested EMA at the exact same time that the price action had stayed above and closed 30 minutes worth of bullish momentum. Okay. All right, so that's pretty much everything I wanted to look at here. I guess we could take a look at the Fibonacci retracement on the 1 minute chart, but I don't put a ton of weight into that. I think it's kind of speculative, but we can kind of see if it will help us understand anything here. So it's fine. So this lowest point here. So we'll click this guy here. Go about right there. All right. So generally speaking, when you're looking at the Fibonacci retracement tool, it kind of just gives us good entry points of support and resistance levels, right? So I prefer the EMA and the VWAP line, but if you're going to use this, just note that when you're looking at it, you can see here, obviously, we've got a resistance, right? Resistance. And then, of course, there are some supports. See, again, it's not super consistent, but it does help you identify kind of points in which the price could come back down or turn itself around. I feel like it's a little bit more beneficial on shorter time frames like this. So, for example, when the price is just shooting straight up, the 15-minute chart EMA and VWAP tool isn't always the best because it's hard to find a good entry point when it's still going up, right? But this right here kind of just tells us that we've got some good entry points. But more importantly, the price action is continuing sideways. So what I'd recommend doing here on the Fibonacci retracement tool is just kind of, paying attention. The best thing to do with the Fibonacci retracement tool, in my opinion, if you're going to use it, is to essentially be mindful of the fact that the industry leaders are using something like this, right? They're commonly using these types of tools to identify entry points. Now, if you look at this, it kind of seems big and messy, right? And that's why I don't love using it. But if you were to, what it does is it helps you understand, obviously, the support and resistance lines, but I think it's important to use these support and resistance lines, but to go just under. In other words, as you can see, this has a major resistance and major resistance here. So if you were smart, you would undercut it just by a little bit, and you'd make sure that you are selling your position in this range, but just before it hits that top point. Okay, because a lot of people, when they're using this tool, they'll try to sell right at the top and they'll get stopped out, or they won't be able to get there in time. Okay, so I guess what I'm recommending here is if you're going to use it, make sure you sell it like right here, for example, if you got a long position, or right here. Don't wait for the price to come above the line because it'll oftentimes reject and come back down. Okay, again, just something to add to it, but again, I'm not a professional when it comes to the Fibonacci retracement tool. And I honestly don't think it's my favorite tool. I know it isn't actually, but it does serve a purpose. So just don't use it as your primary entry point, but use it as something that you consider, just adding to your tool bag, right? Look at everything that we just looked at, and then maybe icing on the cake with that being said. All right. So again, just something to note. So if we're going to summarize here and kind of just go with a prediction, right? Which I try to steer away from, but honestly, if we were to, it's pretty obvious that the price is close to testing the previous resistance. Okay. So previous resistance, because it closed 2 days in a row at 36 cents. Okay. So what'll probably happen, the price will continue upwards. It'll test 36 cents and it may either reject or jump right straight through, right? Because we already talked about that, the fact that anytime a resistance level is tested, it can be broken and it'll blast through oftentimes. So we saw that with the 50 on the Bitcoin chart, on the 4-hour chart. But right now, look, it's going to test it. So there's a chance it could continue to pass through. But just wait for this candlestick to close. In other words, let's maybe just go to the 15 and wait and see what happens here. Because there's a strong chance it could retrace back down from here or again, come right straight through. I know it seems like contradictory information because like, okay, well, what am I supposed to do? It could go either way. Well, that's the thing about trading. You want to see how price, how the price is responding to these support and resistance levels without just jumping in. Because if you jump in right now, there is a chance it could continue upwards, which it looks like it's doing right now. However, there's a strong chance if you get in right now too, it could definitely reject and start working itself sideways and then down again. Okay, so just pay attention. If it can stay above here, I'm just saying this 15-minute chart, if it can stay above this line of 36 cents and hold for just say 3 or 4 15-minute time frames, just say 1 hour, then you're in pretty good shape to continue on and maybe consider adding to your position because then it's going to work as a support level. Okay, again, I'm more risk averse and I don't like buying into it when it gets this high and this extended, because this honestly, I mean, look at that RSI. I know we're on the 15-minute chart, but that's at 85. Okay, so it's getting up there. And I think it's something to be mindful of because it'll probably do something similar to back here where it jumped above and comes back down. Again, that's just my guess. So I guess if I were to, again, clarify here with a prediction, my prediction is the price will not continue up much further and it should progress back down. But again, you truly never know. And we're going to find out here soon. I hope I'm wrong and the price continues to just keep on going up, right? But if you're in this position right now, you might want to consider trimming a little bit and taking some profit, because I personally hate leaving meat on the bone or profit on the table, and I do feel like this could come back down again just based on its history. It's come up and down again a few times, and it has a tendency of going on really strong runs on specific days. Okay, so either way, hope you found benefit from this, and this didn't provide more questions and answers, but ideally you learned a thing or two here today, and that's the important thing. What you do with this position is up to you, of course. If you look at the fundamentals and you identify that there are some really strong catalysts that are causing the price to go where it's at right now, then I would recommend, obviously, investing because you believe in it and you like it. But just based on the technicals alone, I feel like this is going to come back down, and I don't think it's going to pass this level, just based on what I've seen so far with its history and how far it's come in the last week. It's made significant strides. I mean, what is that? That's 175% almost in a matter of what, 1, 2, 3, 4, 10 days. That's a pretty strong increase. So if you have a position open right now, you might want to consider taking profit because it is that's some pretty good gains. Okay, again, take it while you can. That way you don't get mad at yourself for when it reverses and you lose out on it. Okay. All right, thanks again for watching. Appreciate you. I'm sorry for rambling so much. I hope you did learn something today. And I hope you have a great rest of your day. We'll look forward to seeing the next video. Take care. Thank you.